What's the lender looking for?
The lender is looking for 4 things: credit, income, assets, and stability. Your credit needs to show that you have a history of meeting your obligations. If your history shows that you don't pay things back on time, they may struggle with the belief that you're going to pay them on time. If your credit history shows that you are punctual on your payments, on your car loans, student loans, credit cards, they will have a level of comfort that you will also pay your mortgage on time. Your credit is considered your character. Your income is your ability to repay, and that has to be documented by the majority of loan programs. There are some exceptions on investment properties where the market rent is what's the determining factor. But if you're buying a primary residence or a second home, they're looking at you and your ability to repay the loan. Assets, that is how much you have to put down on the property and satisfy your cash to close requirements and reserves. Will the bank be taking every penny you have in order for you to close, or will you have some in return? That's a question that you want to certainly ask yourself. You don't want to be left penniless just to get into a property. Stability. Is your income considered stable? Do you have several part-time jobs and a history of doing so? Or do you have one salaried position that you've been at for a long time? Or are you self-employed day 1 or day 1,000? All of those things make a difference, and the underwriter is looking to have somebody who has demonstrated the ability to repay their debt, the ability to repay the loan that they're asking for, and that they have the ability to close by meeting the loan program requirements.